Hello traders, Gary Wagner here just after 10:30 in Honolulu, 3:30 in New York on Wednesday, the 4th day of February 2015, and this is the daily report for gold and silver. We have modestly higher pricing across the board in the precious metals markets, currently trading up roughly $4 to $5 higher, 440. Currently looking at 1264.90, call it 1265. We have seen a high today of 1271.40, a low of 1260.80, and as I said, current print 1264 and change. Silver also trading higher this morning, up roughly 10 cents on the day, 17.39. The low today is 17.21, high 17.61. More on silver in a little bit. First, let's talk about the trade alert we sent out last night and our buy recommendation in gold. Traders, last night I did send out a special trade alert with a buy recommendation in gold. At that time, gold was trading roughly, this is basis the April contract, roughly at 1269, drifted lower over the next couple of hours in trading, actually to a low of about 1260. Traders who took that call are in anywhere between, say, 1266, 1267 in that area. Also with a recommendation to place a stop at 1251.50. Now, I want to explain a little bit of our strategy, the model that we're working with, and the setup in the way that I currently see it. On Friday, of course, we talked a little bit about the possibility that what we were looking at in terms of these most recent rallies and declines was a series of, in a bullish cycle, a wave 1, wave 2, wave 3, and my real question was whether or not we had terminated wave 3. Of course, 1308 was the high, and over the weekend as well as yesterday with that action, I determined that it's quite plausible that we've actually seen not only the conclusion of 3, but quite possibly the conclusion of that counter wave or the wave 4. Now, when we look at this, and I've removed the candlesticks just so we can look at a couple of, I believe, key elements in here, why this model, I believe, has some weight. And one big caveat with that weight. This signal itself, we're trying to kind of jump the gun, finding support in this area. The market must remain above these most recent lows. Therefore, our stop, which is placed just under this particular low here. So that is the caveat. But when we look at our wave 1, and that of course is always our benchmark, take a 61% retracement, that takes us quite eloquently to our wave 2. The conclusion of wave 2. Now, in terms of wave 3, if we do a Fibonacci extension of wave 1, it actually comes up to about, I believe, 138% in terms of the actual extension. And you can see that here on this 230-minute chart. Wave 1, wave 2, 61% retracement of 1. Wave 3, 138% extension of 1. Wave 4, a 38% retracement of 3. So for that reason, and the fact that we had this double bottom, of course, these are very, very short-term moves. My sense was that it is quite plausible that if we find support, we could see the market actually begin to track higher at this point and move into a fifth wave. Now, if in fact this is how our current scenario in gold unfolds, meaning we find support and the market begins to trade off of these lows here, roughly at, as I said, about 1254, then we would go into a fifth wave. And under a basic model that wave 1 and wave 5 are typically equal in size, we could see this market go to as high as about 1355, 1360 based upon this current model. Now, of course, if this happens, it's not going to be a straight line up. We would be able to subdivide this into a 1, 2, 3, 4, and 5 to take us to a new high. But that is the basic model that we're currently looking at, and the reason for the trade recommendation last night to enter the market from the long side. So traders, as far as our current gold trade goes, my recommendation is to maintain current long position, maintain your current stop, 12.51.50. So traders, as far as silver goes, I did hold off issuing a buy signal in silver. Primary reason for that, if we consider the recommendation that we just issued in gold, we're really trying to pretty much bottom pick, considering we got in at 12.1750. We got out, I believe, 72. Now we're buying back in at 67, and we're basing it upon a couple of factors, but the support level that we're seeing in here. To do that, we're putting a $20 risk initially on the trade, roughly in that area, depending on where you're in and where exactly you've placed your stop. I didn't feel comfortable in silver doing the same thing because of the extreme volatility we've seen and the extreme range, especially this $1 range that we saw last week. If we see good support continue in the market, in gold, and our current long gold, I will look to add silver in terms of our buy recommendations. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Thursday for another daily update review. Bye-bye.